Hey guys, welcome back to the BI Breakdown. I'm happy to have Chris Kirkpatrick here for a part two. The first time we got to talk about a lot of interesting things. So this time we're looking to take some of those same concepts and break it down, help you understand personal finances, everything from budgeting your money and what can you do differently, understanding the world of money, inflation, how's that going to be impacting you, and also too investing and how you could potentially build a business. So, Chris, thanks for being on, man. And before we go any further, tell us a little bit about some of the things you've been doing, some of your trips. I know you've been traveling a lot. Give us a little bit of an update on on what's going on with you, man.
Yeah. Yeah, man. No, thanks. It's been awesome. I know we've been trying to get this interview in for a minute, right?
Yeah,
Like it's
yeah.
I've been all over the map. I feel like I'm launching a real estate investment fund right now.
Okay.
And so I'm on top of everything else I'm doing. I'm gonna, I guess, be a fund manager at this point in time, starting in about 20 days. So that's pretty cool. Doing a whole project down in the Dominican Republic. Uh, just got kind of under contract for our first investment for the fund, which is a hotel that we're buying pretty much right on the ocean down there on the North Shore, on the north side of the island,
Mm.
which is pretty awesome. So we're doing that. That's pretty cool. But then obviously also running Life 180 and just doing my thing. Wife and I did an ayahuasca retreat, which is pretty fun. Went down to Colombia, did that. That was awesome. But just trying to grow, trying to seek, trying to challenge myself, and I'm one of those people that's always kind of questioning my own beliefs and my own way of doing things and trying to grow. And and that's that. It was a beautiful summer because we were able to take about a 2.5 month trip, going from the Dominican Republic to Colombia to Las Vegas for the World Series of Poker, and kind of working and doing self work in between everything. And so it was pretty awesome.
Man, that's awesome to hear, dude. I never understood the game of poker. I'm going to get into it. I haven't understood the game of poker, but to watch it, I've always watched it
Yeah,
when they had like the tournaments online, and whether they had it on TV,
yeah,
I would watch the tournaments because it was very very serious. I knew when one person exchanging some chips to another person, they just lost some money. So that's the part I understood the
yeah,
most. Now I want to dive into one thing you just said that was really really powerful. Questioning what you know and always with kind of like your truth or what you think is
mhm,
right. That's so powerful, man. Because
yeah,
I think that like I did an interview with Chris Noggle. Of course, you know Chris Noggle, and we were talking
yeah. Of
about a
course.
lot of some of the same stuff. From politics to how the world is ran as far as economics. And he's the only other person
Yeah,
besides yourself that I've been able to have that kind of conversation with on the platform. So I think it's important now more than ever is for everybody out there. We all need to question the truth because the truth is the truth. It's not my truth. It's not your truth. It's only the
mhm,
truth. And I think that's
yeah,
it always needs to be questioned. Anything that cannot be questioned, it can't be the truth
mhm,
because it takes away an
yeah,
opposing side. So man, it was crazy. It's a perfect lead up to all the stuff all the stuff that we're going to get into. So what I want to start with is I want to start with inflation. Okay, so last time we talked,
yeah,
we were going into inflation a lot. I'm going to give a generalized breakdown, and then we kind of go from there. So, guys at home,
cool.
I have a series that goes through more than just infinite banking. It goes into financial education, and it's a playlist on this channel. So make sure you click on the financial education playlist. If we're talking about a lot of things that's just going right over your head, okay, you need to click on there. You need to watch that so that you can understand when me and Chris or any other guest is talking, and we're trying to, we're kind of using that lingo, that financial jargon. You need to know what we're talking about so you can follow along. Make sure you click on that playlist. But inflation in itself and what it is the printing of currency that causes inflation. So the dollar that we use to buy things is chasing a limited amounts of goods and services. So when you buy things that are limited, like housing, like food and beverages, it's going to cause the price of those things to rise because the dollars are forever expanding. So like I said, I go into a deeper concept of what inflation is and exactly how it affects you. But I'm going to let Chris
Mhm.
now give us a little bit, expand on what inflation is, Chris. And I have to get people to understand the problem You might know Jason Lowe as well. So I interviewed Jason Lowe,
Oh yeah.
and he was saying,
Yeah.
Rob, I think we're giving a lot of people the solution. We're banging them over the head with the solution, but they don't understand the problem. So we got to bring them back to the problem. So everybody inside this space, whether it's investing, the banking space, infinite banking, I think we all have a paradigm shift that we came across where we understood, we looked at the system and we looked at the problem first, and we said, okay, this is a problem. Something's wrong with the world. Something's wrong with the game of money and how we're currently playing it. We need to play it a different way. So expand on inflation for me, if you would.
Well, I think before even going into that, kind of like expanding on what you just said, is one of the things that I kind of tell people as I'm coaching them with their money is the number one problem that we have in this world, and especially America, the US and Canada, is that people's money and their financial strategy is not in alignment with their own values and their own beliefs. And I think one of the challenges there is that people are not really clear on what they even believe, on what they even know, right? Like, people just kind of like go through life like a zombie and just go to their job and come home and hang with their family and watch Netflix and do their thing, and they're not intentional about really learning like what is impacting their life. They're not intentional about what they're actually trying to create out of life. And if you don't understand what you're trying to accomplish and what you're trying to live life for, and then kind of reverse engineering that and learning about what you need to do to accomplish it, and to be intentional about being successful and creating that life that you want to live, then it's really easy to live out of alignment with what you truly believe and what you truly value. And I think that's where we kind of back our way into like thinking about these things like inflation and whatever, because at the end of the day, I mean, you said it, inflation, money printing is a part of inflation for sure. But inflation is also a supply demand issue, right? Like we can have inflation. They had inflation before money printing existed. Inflation would go through these boom bust cycles before.
Tulip mania.
It was just different. It was like it was based on supply and demand, and it was based on like for instance oil, right? Like if we had no money printing, oil would go up and down in value based on the world's ability to produce it and process it and distribute it to different parts of the world, and all these different things. And so that's just one example, but it's supply and demand and money printing and monetary policy, interest rates. Are the idea is the Keynesian economic theory would say back in the 20s when it really got nuts, would say that that economists are smart enough to control the economy, and they can do so by expanding the monetary system, by reducing interest rates, because when you reduce interest rates, you inject a lot of money into the currency population, currency base. And when you raise interest rates, it's basically like people have to pay more in interest that goes into the banks, and we basically light that money on fire. And that money gets taken out of circulation. And so then the idea is in times of hardship, the Fed is supposed to be able to reduce rates to inject more money to make life easier for people. And as times get better, we're supposed to raise rates. And, because the economy is quote unquote healthy, you're not supposed to feel it, right? Like that's the idea. That's been a flawed system, and there's been a lot of kickback on that for 100 years at this point in time. There's been kind of two sides of the debate, but I think we're at the time now where the debate is over, and people are realizing like, we had last year the first time with an inverted yield curve, we're going into a recession, and the first time that the market lost and bonds lost in the same year. So there was no safe haven. The only asset, by the way, that didn't lose was whole life insurance. Just want to throw that out there.
Yeah, man, that's crazy. Diving into what you were talking about is, I wanted to touch on some of the things where you're talking about inflation and how it's not necessarily just the printing of currency. So
Yeah.
The printing of currency drives inflation, right? Because it takes away the freedom of the market. So like with the interest rates going up and down and them trying to control it, the Keynesian economics behind that is the economists are saying, well, which is the opposite of freedom, in my opinion. We can control the factors of production by controlling the monetary, like you were saying, it's the fiscal policy, expanding and contracting the monetary system as far as currency, and also too controlling those interest rates via the Fed. So we see these boom bust cycles and these business cycles where if you see, like for an example, during the pandemic, we had we had the health crisis that was happening at the same time. What happened? You've seen
Yeah.
people go from almost, millionaires to billionaires. Billionaires went from billionaires to almost trillionaires, right? People didn't understand the economic shift that was happening when people were doubling and tripling their net worth. For an example, you seen Jeff Bezos and Elon Musk. I believe those two were swapping spots for the richest men in America. They kept swapping spots
Yeah.
because what happens is the people that
Totally.
control the assets and they own the things that go up in value that the dollars purchase, they become wealthier over time. And so I think that's the thing about inflation, and what hurts us is people don't understand how your dollars that you're working for, if they're devaluing themselves over time, you then have to work harder or you have to do more. Either you're going to have to work harder for that dollar or you're going to have to find a way to make that dollar work harder for you. And so that leads me into my next thing is, why and how infinite banking. So most people, just from our conversation already, we can't help but talk about it because, that's what we're in. That's the industry. So you said your whole life insurance didn't lose. So it in some way, shape or form, it's a solution, right? It was a hedge against what was happening. Now, also, too, one thing that you didn't mention is the precious metals. Now, oddly enough, gold underperformed, but what did perform and what did not lose, we had other precious metals. So platinum, for an example, copper did a historic run around the same time. So we did see precious metals in general also be a safe haven and a hedge. So that's what I would consider real money, hard money is precious metals. The dollar and the currency, fiat currency system is supposed to be backed by those things, but they're not. I call those fake money. So Rich Dad Poor Dad, Robert Kiyosaki, the author, he always talks about fake money. His new book out is Fake. If you guys definitely want to check that out and read that, that helps you wrap your mind around inflation, what's going on with the currency system as well. So dive a little bit into, now that we understand a little bit more of the problem, even though it's a very expansive problem, it becomes more and more over time, and there's a lot of pieces to that puzzle. We know enough about the problem to understand why we need some kind of a solution to it. So why and how is infinite banking a solution?
Well, I think it all boils down to control. I always kind of tell people that the the solution to all this is just focusing on financial structure, and not worrying so much about rate of return on investments that we make. I think one of the biggest lies that we're told is the younger we are, the more risk we can take. I'm 43 now, and this is something I wish I'd learned when I was in my early 20s because I was taking a ton of risk. I lost a lot of money, and had I known then what I know now, my life, as good as it may be, would be a lot better,
Yeah.
right? Like I'd have a lot more, assets under my belt here. And so, and the real think about it this way: if we understand the concept of risk and we understand the concept of market cycles and the idea of trying to make money when everybody else is making money is just a flawed way. I mean, think about it this way: people, what is the traditional methodology of financial planning in the United States? It's go to school, get a job, invest in your 401k, qualified accounts, buy and hold and accumulate assets over this period of time in these accounts that the government control. And hopefully 30, 40 years from now, you'll have a pot of gold at the end of the rainbow. But the problem is, 95% of people, I would say, let me say this. The problem is, I would call the traditional financial system right now a failing financial experiment. And the reason I say that is because if you look at 401ks, IRAs, stuff of that nature, I'm older than those accounts, right? And
Mm.
so we now have the first generation of people that are getting to retirement that have used those types of accounts for the entirety of their career to save for retirement, to try to reach financial independence, which is ultimately all we're trying to do to hit retirement, right? And 95% of people are not able to maintain their standard of living and be financially independent when they hit retirement. So that's, to me, that's just showing it's a failed financial system. And, when we look at like why, and if we really, because I'm a big like, okay, that's great that the numbers are what they are, but the question is, why is that the case, right? And so I look at it and it's like, okay, let's not look backwards, let's look forward, because the world is moving much faster in 2023 than it was in 1983, right? When people maybe started this journey, if people, when they started their career in their mid 20s and now they're retiring, 40 years later, the world is moving faster now than it was during their career. So we can't think about it in the same terms. And the question that I have to you is like, with the national debt at 30 whatever trillion dollars that we're at right now, with
Remember, I told you we're going to 40
debt,
trillion last time we talked. Remember, I told you.
dude,
I told you.
I know, dude. With consumer debt, household debt is over 17 trillion right now. With everything the way that it's going right now, with interest rates going up, with inflation uncertainty, with political uncertainty, with taxation uncertainty, all these things. If you think about it, the way that the government gets people to save for their retirement, and the whole idea of buy and hold and hope and ride it out and just maybe you'll get there when nobody's succeeding. The three variables of political risk, inflation risk, and taxation risk that are going to impact you, that are going to have a negative impact on you based on just where we are right now. If you think about that, you put your money into that system to delay having to deal with all that, I promise you're going to pay the price. And so where I think listen, I go back to like why once again, I'm always looking at why is this the case? Why, and not is that bad, because I think we can all say, yeah, it's bad, but the question is why. And I think it's those three variables, right? And so then people go, why do you do what you do? Why do you love infinite banking? Or like, I don't even like to call it infinite banking. I know that's like the marketing term, and I know like Nelson Nash and all that stuff, and it's great. And I not disparaging it. I'm just saying, like, I just like to look at, why do I love whole life insurance, right? Like, because that's what it comes down to. Why do I love a properly designed whole life insurance policy in my life? Because it forces me to think about human life value. It forces me to think about, what do I want to create and who do I need to become to live the life that I want to live and create the life that I want to create for my family. And it's the idea of saving before I invest. It's the idea of positioning myself for opportunity in different market cycles and positioning myself to keep my safe, liquid, accessible capital in a place that's going to beat what the banks do, and it's all, to me, it's about control. It's about options, right? And it's about putting myself in a position where I am the pillar of success in my own life. I'm like, I talk about this in my book that I have coming out, and it's the 5 F's of life: faith, family, finances, fitness, and freedom, right?
Yeah.
And so we know everybody, like, at the end of the day, we're all after what? Freedom, financial independence, right? That's the goal. That's what retirement is. Now, why has everybody bought this lie and myth that we're supposed to wait till we're 65 to do so? Now, first of all, it's just stupid. That's just scarcity thinking. Like, to think that you got to go to school, get a job, work for 45 years, and maybe reach success and be unhappy the entire process to get there, and then ultimately feel unfulfilled and uncertain about what the rest of your retirement is going to look like. That's not a fun life. And that's I think that's a big issue. But I think the reason is because we know that when it comes to our faith, we cannot outsource our success with our faith, right? Like, we got to read the Bible. We got to, it's a personal thing. We got to take accountability for our relationship with God, whatever that means to you, right? Like, and we got to put the work in and like understand what it even means to us, right? You can't outsource it to your pastor and be like, hey, pastor, tell me what I think.
Yeah, right. Read the Bible, maybe an interpretation, but your own personal salvation, no.
Sure, exactly. As a husband, as a father, I can't outsource my role with my family and my job as a dad and as a husband and like all that. Like, nobody else, I can't have my best friend come over and be a better husband for me or be a better father. Like, that's a recipe for disaster, right? Like, with my fitness, I got to take massive accountability for my own health, for the way I eat, for my diet,
you look great,
for my
man.
working outs. Like, thank you, and I gotta I got to do that. If I don't, it's going to fall apart, right? But somehow, like, all those things are really important because I look at freedom as is like holistically, right? Finances are a part of it. Somehow we've been duped into believing that even though we understand we can't outsource these other things, which I would deem with money as the four kind of pillars, the most success, the four most important areas that we need to take accountability for to have freedom in our life. Because make no mistake about it, if you don't get your health right and your family right and your relationship with God right, you can hit retirement and like whatever, and you're not free. You're going to be miserable. You're going to be a slave to something, you know? And so I think you need to do all four of those F's to actually achieve freedom. And the problem is we're not taking, like, we've been tricked in the current financial system to say, listen, just give your money to somebody. You're not capable. This is like my problem with Dave Ramsey. Dave Ramsey thinks you're too
Oh
stupid to
my
manage your own money.
gosh.
You know what
You
I'm
must have
saying?
saw my
Like,
TikTok or something. I literally said those exact words. I said Dave Ramsey thinks that I have a quote, and
totally.
I'll even pull it up after this. But keep going.
Yeah. No, so like I just look at it like this is like, if you want to I heard Tony Robbins say this one time and it hit me right between the eyes because listen, we are where we are because of who we are in life, right? And my what I really believe, and one of the reasons I love whole life insurance as a foundational asset, is because it gets you really focused on your human life value, and you realize that money is just part of the equation. That we are put on this earth. We're here for a short period of time. We have to think about legacy. It's about doing the most with what we have right now, but also creating systems and leaving in our kids, you know, more, not just leaving stuff to them, but teaching them systems, teaching them responsibility, teaching them, you know, principles about how money actually works and what they can do to create more value in the world. And like, to me, I want my financial, whatever I'm doing with my money, I should say,
Mm-hmm.
I want that to be helping propel me forward to grow, to create the life that I want to live. If I'm just like earning money and giving it to some person to invest for me and putting blind faith in them that they're going to retire, like invest my money and do the best thing for me, I got news for you. That incongruency, the fact that your money is not in alignment with your values and beliefs from that context, is the reason we have such a cultural problem around money and why people are failing. And so my why is to get people to open up and wake up and open their eyes to the fact that they are where they are because of who they are, and their relationship with money is probably the biggest problem with it. Because I promise you, you get your money right, you have more money now, and you have more clarity, and you can prioritize things. So now you want to eat better, you want to go to the gym, you can spend money on a personal trainer if that's your problem. You have it, you can handle it. You can eat organic. You can tithe more and give more to your church and feel more fulfilled. You can have more time to take your kids on vacations and spend more time and have more freedom with your family. Like, you can show up more powerfully in life. And it all comes down to, how do you handle your money? And I believe when we focus on structure and we focus on building from the bottom up, and that's why I love using whole life insurance for that, because it's a self-completing plan, then you are able to show up as the most powerful version of yourself, and it puts you in a position and on a trajectory to grow into becoming who you want to be, to live the life that you want to live.
Man, you said so much stuff that I'm like, right now, I'm mad I don't have like handy dandy. I'm trying to keep notes and stuff at the same time because I'm trying to learn and like moderate this thing at the same time. So one big thing that you just tied all together through literally whole life insurance, like whole life insurance for you is so much more. You went through sociology, the psychology, the methodology, and even like just the values and morals of society and how money is all tied to that. And I think that's why I think the government understands that. If you think about some of the things, and one of the big things that you said was, you talked about the political side of it, that if you think that you can somehow run away from that, then you can't. One of the comments I got on a previous video, shout out to Nancy. I'm actually helping Nancy get started with an infinite banking policy. So, of course, that's just a whole life policy designed for banking with a mutual company. And
Mm-hmm.
One of the comments I saw that was put down there, she was saying, well, I just want to learn about infinite banking. I don't want to per se get into the politics, right? Or the weeds of things, right? And I was laughing when I actually viewed the comment, because I was like, I totally get where she's coming from. One thing having this conversation with you today is why I have this channel the way I have it, though, is because, for an example, the banking bros, they're going to give you infinite banking until till you're green in the face, right? That's their theme color over there. And
Literally.
but they do an awesome job. They're going to make sure you understand. They're going to break it down. They're going to help you become your own bank, literally. What I wanted for better investments is, I think that in life, everything is an investment. Even, and I know this is contradictory to what we believe, your policy contract is not an investment per se, but an investment into why you got whole life insurance is because you invested into yourself, and you are the best investment. So if think about it, if you don't protect your life value, who else will do that? Right? So a job or somebody else might do it, but do you really think they're going to give your family a full death benefit? No, they might give them $10,000 of the $500,000 that they actually have on your life, right? So you made an investment into yourself. You made an investment into your own system of control, where you can control your money more, just like you were talking about. So I think it's important that we have to, and that's why I have a truth versus half truths section of this interview, because we need to understand that a lot of things we've been told are half truths, and it starts with the government. Donald Trump allowed in connection with the Fed, which is the Central Bank of America, helped generate another $7 trillion inside of debt. And we received those in the form of PPP loans, stimulus checks, so on and so forth, which is why he excused the taxes for a certain amount of time, but we ended up having to pay those anyways later on down the road. All inflation does is literally kick the can down the road. It's not dealing with today's problem so that we can deal with it later on in life. If we don't focus on, if we don't deal with everything from the political side of things, from just the monetary system in itself, what's going on with the Fed, like you were saying, a lot of the things we're using our money for and the things we're doing literally don't even align with what we actually believe morally. So whether it's Republican or Democrat or whatever other middle party that you might believe in, and whoever you're voting for, and you value, you have to understand that these people are not necessarily having your best interests at heart. These individuals all need to be held accountable. So when we talk about these different things, it's because our nation, where we live, our nationality is just as important as an investment. We have to reinvest. When we spend our dollars and when we give control of our money over to someone else, because that's what's happening. Before you get a paycheck and you spend it, what's happening? You got income tax. Then you have to pay taxes again on all the things that you buy. Then you're putting money into a 401k that has taxes and penalties. We have all these things that's structured for us to where, how much of that dollar, let's say every dollar that you make, how much of that dollar do you actually own and control? I would go as far as to say maybe 1 penny, right? Out of the 100 cents, you might actually own and control 1 penny. So if we don't understand the system of control that we're in, to kind of give an analogy, if a slave doesn't know it's a slave, it doesn't want freedom. And I think that when we think about slavery in modern day times, it's always, like you said, you're going to be a slave to something if you don't align everything and find an equilibrium. So I think we think of slavery, we always think, it has to be a certain color of people, a certain race, or it's a certain demographic of people, and even it has to be somewhat dealing with racism. Well, I have a wake-up call to why I focus my channel the way I do, is because this isn't about black, white, purple, pink. We are all a part of a system of somewhat slavery. And once you understand the monetary system, you understand that all these things that we disagree on, politics, racism, pro-life, pro-choice, all these other things, look at what the government's doing. They're taking a step beyond just being your government and stepping into what? Cultural norms, cultural problems, sociology, getting into the society. We need to, if we can control society, we can keep people distracted from what's going on over here and how we actually run their lives. And more importantly, if we control the monetary system indirectly controls society. All right, so that's my spiel into piggybacking off of everything you just said. And I want so let me go. Let me get your boy Dave Ramsey here. He says here.
Oh boy,
this is from his sponsored content. So this is straight from Dave. He got the blue check on there. It's not from me. This is straight from Dave. Whole life insurance is the payday lender of the middle class. It's a ripoff, and you don't have to waste your money on it. So let's break down just that section there, and I'm going to speak to what I said about it. Focus on what he just said. It's the payday lender of the middle class. Are we not talking about borrowing against our death benefits to buy things and having a chance to pay ourselves back? Notice, too, I call Dave Ramsey a classist. Jeremiah says, well, I don't know. I told him, I said, no, he's a classist. He's a classist, and here's why. It's almost like I'm calling him a racist, right?
I don't even know what a classist is. I'm gonna admit my ignorance.
Okay, cool. So I saw your face, and I was like, let me break down what this is. So a classist is an individual that believes in almost a class system. They want people to stay where they're at. So let's make a pyramid here, and let's say at the bottom we have you have the lower class, middle class, high class. Dave Ramsey believes, like you said, you're too stupid. The poor class needs to give their money to the high class. The high class can then dictate and make decisions over that money, and then they trickle the wealth back down to the lower class. Dave Ramsey, in my opinion, personal opinion, that is that he's a classist. The reason being is because from his own words, the middle class. So he's telling you, you're not a part of the middle class, and you're too broke to actually have whole life insurance. It's a ripoff. How is it a ripoff? He doesn't say why it's a ripoff. He immediately goes into the next point. Term life insurance is the way to go. With a 15 to 20-year term life policy, you'll get more coverage for a much lower price. Once again, he leaves out a lot of context and details. At the end of that 15 to 20 years, if you wanted to get that same term policy, it would be just as expensive as if you got a whole life policy to start with. Because now you're older, 15 to 20 years older, you don't have coverage, you need coverage again, and if you try to get term again at that point, and your investments did or did not work out, that's still 15 to 20 years later, you're going to have to pay just as much as you would have paid for a whole life policy to have that term policy again. So he says during that time, you can use the money you save to reach your financial goals, get out of debt, savings, investing, and securing your future. Now, is that not all the same things that we're telling people that they can do with whole life insurance? But they can do it right now. They can borrow from their policies right now and do it. And my issue is that he never, like I say, he never goes into why it's a ripoff. He's simply just saying whole life insurance costs too much. Buy term because it's cheaper. You can't afford whole life insurance. You can't afford the on-brand product, the good product. Here's the great value version. Here's what you get. You don't need to focus on that.
Yeah, for sure. The thing that I find funny about that is like a lot of people that say, well, whole life insurance can work, but it's only for the wealthy people of the world, right? Like, to me, principles are principles are principles, and principles are absolute. Like, you can have your beliefs, I can have my beliefs, but principles are absolute. And if all the wealthiest people, the wealthiest corporation, the wealthiest, all the most successful banks are all utilizing this, to me, that's showing me that there's a principle of success. And one of the first mentors I ever, had that made the biggest impact in my life said, Chris, if you want to be successful, find the people that have the life that you want to live and emulate what they do until you get what they have.
And that's why Dave Ramsey is a classist. But he's telling you, you see what rich people doing? Those people are terrible. But Dave Ramsey's rich.
Well, but so Dave Ramsey, so let's talk about, I don't know how much time you want to spend on this, but
go ahead. Let's dive into it for a couple of minutes.
It's funny. I literally just, before I hopped on this podcast, I got done optimizing one of my videos. That is why buy term and invest the difference is wrong. And the thumbnail is like, is Dave Ramsey wrong, with a, Dave Ramsey face and me giving a weird face and whatever. But it's, the whole idea is he's convinced people about the fact that whole life insurance is bad because of several things. A, it's expensive, which is a fallacy when we look at human life value. And I'll get more into that. I'll circle back to that. It's the fact that you don't keep your cash value. The insurance company keeps your cash value when you die. That's a thing he says, and we'll get into these things, right? Why should you pay to borrow your own money? That's another thing that he says, right? And so and there was one other thing that the guy said. So but anyway, I had this guy leave a YouTube comment. Don't forget, the fourth thing is
is that it makes a bunch of commissions for the agent and it helps the companies a lot, but it doesn't actually help the person that buys it.
Yeah.
Which was crazy because
So when we look
term pays great commissions, so that's crazy. But yeah, go ahead.
well, in term, like, what is the actual cost when 99.1% of the time term doesn't pay out? Like, term is a more profitable product for the life insurance
By
company
far.
because of the fact that they hardly ever have to pay a death benefit out, when with whole life insurance, they always have to pay a death benefit out eventually, right? And so it's a function of that. And so when we look at it, like the whole buy term and invest the difference concept, I'll say this, I agree with it. In the sense of, if you're looking at whole life insurance as an investment, then I would say, all right, that's fair. I agree with it. But like, we shouldn't even be looking at it like that. Like, if you're looking at buying term and invest the difference as your philosophy, I would argue that your money is not in alignment with your values and beliefs, and that you don't even understand what you're trying to accomplish in life, and that your money is not in alignment with helping you create the life that you want to live. And so, like, that mindset is a zero-sum game. That mindset is saying, I'm going to give up control of my financial success, versus what we need to be thinking is, am I focusing on financial structure? And the funniest thing that I find about Dave Ramsey on all this is that he will be the number one advocate to tell every single person on this earth that they need an emergency fund, right?
Yes.
I mean, everybody needs to have 6 months of savings.
Yeah.
The best hands down place in the world to keep an emergency fund is your whole life insurance contract, period. Hands down, not a questions asked. I will debate any person on the face of the earth about that topic. Yet he wants to focus on the investment alternative, not like, hey, where are you keeping your safe money? Where are you keeping that emergency?
Well, this channel is Better Investment, so I don't want to cut your knowledge here, but let's take it from right here where you're at before you move forward. So we're on the Better Investment channel, and we're breaking down finances, right? So term as an investment. Let's look at it from like exactly what you just said. If 99% of the time the person that buys it loses, like think about the stock market. If 99% of people lost, even the stock market produces more winners than that, right? If 99% of the time you lose, is that actually a better investment? Is that a good investment?
Well, no, I mean, but here's the deal. Like, once again, term insurance has its role. Like, I'm a big believer in term insurance, if as a supplemental thing. If you don't, because life is all about cash flow. Like, there are going to be times like I got a wife and 3 kids. I have term insurance, right? I have whole life. I have, but I have term to supplement it, because from a cash flow perspective and from a strategic perspective, I want to make sure my family has maximized my human life value from an insurance perspective, and from a cash perspective, and whole life policies being optimized for cash value, just can't get it done. So like, I need to supplement that human life value with term, and it locks in my insurability so I can convert it at another time, right? So like there's that. But here's what I also want to say. What I love about whole life insurance is when you focus on structure. Warren Buffett talks about this a lot. Do you mind if I write this out a little bit?
No, go ahead.
So like, check this out. So if we look at this, right, and this is the biggest thing. We got to think about life in building our safe foundation first. That's why I do this thing called the Life 180 Pyramid, and we talk about building your financial safety. Unfortunately, most people have done this. They go out. We're taught the younger we are, the more risk we can take. So people don't save money. There's 64% of Americans are living paycheck to paycheck, right? So there's no safe money, there's no savings, there's no whatever. We're all taught, go out and save for retirement in a 401k, but you're not saving for retirement, you're investing for retirement. So what happens is, as we go through life, we go through these market cycles, we have one time where, because you have no safe money, all your money's in high risk assets, you go for a decade feeling like you're really good, you got a 40-year time frame. What happens is you lose 40% of your money all the time, and if your whole financial life is built on this one point of instability, you lose. Now, on the other side of things, what we teach people with financial structure is build your financial foundation. Because when you do this, you're not an investor. You are a speculator. Make no mistakes about it, because you are always exposed to market risk, and you are one bad year away from your whole financial life falling over. That's it, right? But when we focus on building a foundation, yes, it's going to go a little slower. It's going to take you a little time to build that foundation and have it built right. But once you do, now you can start doing some medium risk, longer term investments. And if you want to get into the higher risk stuff like crypto and all that stuff, like, listen, I have no problem with crypto. I love taking high risk. I was a professional poker player, for crying out loud. So like I have no problem with risk and variance and all that stuff. But think about it this way. If I build this foundation up, let's take the same scenario where this happened over here. Now it goes here and we lose half of our high risk investments, right? Doesn't matter. We still got the rest of our pyramid here. It's going to rebuild like no problem. But and this, by the way, right here is what Warren Buffett talks about and teaches. And like Mark Cuban, I heard a thing the other day with him talking about the fact that, the most important thing you can do right now is have cash on hand and make sure you're liquid and make sure that you are actually positioned to be an investor. This is an investor profile. Companies, corporations understand the concept of cash flow and liquidity. That is what this is. Americans and Canadians have been duped into believing this is just what you need to do. Go to school, get a job, don't save your money, just live paycheck to paycheck, put your money in high-risk 401ks, ride the market cycles, and then every 10 years, when the market crashes, you got to start over and you're screwed. And that's what happens.
Man, dude, I mean, honestly, you got to be an instructor or something at Better Investments, dude. You just he like, nah, this how you be an investor right here. And what's crazy is you're exactly right. What people don't understand is that just like you were talking about with the yields, what they do. The government is controlling these cycles, man. The government in conglomerate with the Fed, they're controlling these cycles. So you have to think about it. They already know and understand when the market drops, we raise it, right? We're raising yields. What is that going to do? The banks are more stingy. We don't want to give out loans for properties. We're only going to give it to the top tier customers, top tier companies, businesses. Money is not loose. When the yields are down, money is loose. That's why the markets are taking off. They're running. But think about it. When it crashes, whether it's a housing market, crypto, stocks, whatever the case is, when you want to buy it the most, because you don't have the pyramid set up as an investor, just like Chris is saying, you don't have any liquidity. You don't have any dry powder to then deploy into the market. You can't take advantage of a low Bitcoin. You can't take advantage of a low Ethereum or XRP. You can't take advantage of low housing prices, rentals, land, even different acquisitions and mergers, so on and so forth. You can't take advantage of this stuff. And if you pay attention, like I said, whether it was during COVID, during 2008, a lot of people got hurt, but a lot of people became multimillionaires, billionaires, and even going on to be trillionaires. Why? Because they understand that it is a wealth cycle. It is a boom and bust. And if you understand how to ride that wave, get on that roller coaster, understand when the dips and the turns are coming, you can be a better investor. So like he said, there's a difference between being a speculator and being an investor. A speculator has no thesis. You're simply in the market, and it's almost as if you went to the casino. A speculator has no thesis. They don't know why Bitcoin is a buy. They don't know why Ethereum is a buy. They don't know why it's a good time to get into real estate or what type of investor they are, because they're not an investor. They simply speculate. An investor has some kind of fundamental grounding behind why they do what they do, and that's what Chris speaks perfectly to what you were talking about. Money doesn't align with people's morals and values nowadays.
And listen, the thing that I love the most about this is the process of building this foundation and doing this, and spending the time to do this first, especially for people your age, that are younger, that are just getting this journey started. The process of building that, you're going to grow so much. You're going to learn so much in that process that by the time you've built this foundation, you're going to be so much more advanced. You're going to have so much more clarity. You're going to have so much more understanding of what you are looking to accomplish, that by the time it comes time to invest in medium or high risk stuff, you're going to know why you're doing it. You're going to know how it's in alignment with your beliefs, and it's going to reduce your margin of error. I'm not going to say that you're going to be perfect and that you're never going to make a mistake, because God knows we all do, and it is what it is. But it's going to increase your likelihood of success and your chances of success. And I use this analogy. You're younger than me, so I don't know if you remember the company. Do you remember the company BASF?
No, I don't. What did they do?
So in the 90s, there was always these commercials, like on the NFL, when I'd watch the NFL every week, and they had a BASF NASCAR. BASF sponsored a NASCAR, and it was BASF. They had these commercials that would go all the time. They didn't make any products, what they did is they had stuff. They said at BASF, we don't make the fishing line you use, we make it stronger. We don't make the paint you use, we make it brighter. We don't
Mm.
use like we don't make this, we make it better, right? Like so that was their tagline. At BASF, we don't make the products you buy, we make the products you buy better. That was how every commercial ended. So here's the deal. Whole life insurance isn't the investment you make. It simply makes the investments you make better by having it there because it's going to allow you to be more impactful with all the investments you make if you get whole life insurance put into place first.
Okay, cool. So the system of putting deposits into the system, our banking system, it
Mhm.
then buys our death
Yeah.
benefit. We borrow from that death benefit, and we can now use that money tax free, right?
You can access it tax free. The only caveat I would say is you're accurate with saying you're borrowing from the death benefit, but you're really I want to make sure people aren't confused because they're like, if we put money in and we got $1 million death benefit, we can't borrow $1 million right
Correct,
away. We can only
correct.
borrow against the cash
It's a
value.
stated
The cash
value
value.
that
Yeah.
it is a compounding stated value that you can borrow
Correct.
from the death benefit. I like
Right.
the way you corrected me on the explanation because this, I mean, like you said, every we want to, like I said, and we're going to move into the truth versus half truths.
Yeah.
We went
Yeah.
into Dave Ramsey a little bit early, that, but he didn't even have some half truths. Some of those were just lies.
No. No.
So
Yeah.
but
Totally.
the so I want to make sure that I'm sticking the closest to the truth as possible. It's a stated
Totally.
value
Love it.
that increases at a compounding rate over the course of your lifetime, and cash value inside of
Yep.
a banking policy should grow to equal the death benefit because cash value is the death benefit, right? So with
Hmm.
that being said, is we can do tax-free investing, right? How much,
Hmm.
like you were saying, it makes it stronger. If I can get, let's say,
Hmm.
4% in my policy, if we were to do dividends, and I can go and get another 10% in the markets, or even maybe an infinite return doing real estate, how does those two coming together, and how is that better than just me doing the direct investment with my capital? Well, just like you were saying, with that company, what is it doing? It's making it stronger, right? It's making it better. And
Hmm.
so on his channel, Better Investments, we want to make a better investment because better investments equals a better future. So I want to dive into now,
Amen.
what have you done with IBC? So the infinite banking concept, which of course is, like you would like to refer to it, and I think is a good way to say it. It's cash flow
Hmm.
insurance, is what it is. So
Yeah.
what
Yeah.
have you been able to do with your policies? I know I'm sure you have more than one, right? So what have you been
Mhm.
able to do with the policies? Some of the things on the investing side of things. Give me one or two investments you've been able to make.
Well, I mean, just like when you look at what we're doing for real estate, like put it this way, the opportunities just down in the Dominican Republic alone, liquidity is everything. You can't get financing down there. So, whenever you have the ability to have access to capital, it opens up opportunity. And so there's like here's the thing is that like, and it just goes back to what I'm showing here is I believe we don't want to make money. I'm going to just say it this way, right? Like I believe we don't make money. This is what most people do, right? The markets go up and they come down, and then they go up and come down, and you'll notice that there's a trajectory that it's going up. But the problem is everybody tries to make money in these periods of time when the reality is
You make
this
money
is
on the
where you
dip.
need to make money,
Yeah, on the
right?
pullback.
Right? Because what happens is because everybody's structured like this, and when we have a down cycle right here, this is where people's lives fall over financially, and they gotta, that's where opportunity is created. So the whole idea of what we preach is become an opportunistic investor profile and take advantage of these market cycles. And so when you ask like what have I done, like that is just the philosophy is like you just wait, and sometimes it takes longer. Sometimes you have to look for those cycles. But I think that's one of the things that I love that Nelson Nash talks about all the time is like the more you have in these things, the more prepared you are, the more opportunity has a way of tracking you down, right?
Got
Like,
it.
and that's I think the biggest thing. And I would say like I wouldn't be in the Dominican Republic right now doing the fund and doing the three. We're building 3 Airbnbs right now and doing all that stuff. I wouldn't be doing that without this. And guess what? those investments and opportunities crush any real estate opportunity from a cash flow perspective that you'll find in the United States.
Yeah, because it's a you're pioneering. You're inside of a new plane.
Yeah,
You well, and then too
yeah.
the competition. When you have that first movers advantage, competition, which is great because
Mhm.
that's a part of a free market. Of course, we're Austrian economists here, but at the same time, when you have that first movers advantage, you get to take the market and you kind of control pricing and you kind of control. Well, you just have more control in general before somebody else comes in to compete with you, and so that's a part of being a better
Totally.
investor, man, is knowing when to get in, seeking out opportunities, and having
Yep.
the fruition to know what's a good location and what's going to be a good investment. So I want to dive in now.
Yep.
This is truth versus half truths, and this segment is going to be what would Curtis do. All right. So
Oh
yeah,
boy, here we go.
yeah, we got
Oh
Jesus
no,
of the
this is gonna be bad.
IULs. So
You're gonna get me in trouble,
now
buddy.
you
You're
can,
gonna get me in
hey
trouble.
man,
It's okay. Here we go.
I'm trying to avoid some defamation too on this end. So we're gonna take his exact
Yeah, no,
words
you're
from
good.
audio. All right. So one of the first things that that Curtis says is that whole life insurance does not have leveled premiums. The cost of insurance actually does rise over the time that you get older. It's just not shown inside the contract. You have to call and ask the company about it.
Okay.
Your face is telling me a
Well,
lot right now without you saying anything. So go ahead and speak on it.
it listen, this is the thing with IUL versus whole life, and listen, he's obviously an IUL guy, right? And so, um, the answer is nobody really knows. That's the real answer. The what I can tell you is that your premiums are fixed with whole life. Your premiums are guaranteed with whole life. And when you look at an illustration, I can look at a current assumption illustration and know that the only variable to that illustration is what are the dividend payouts going to be, right? And if I'm working with a company that's paid a dividend for 120 plus years, um, consecutively in every market environment, in every recession, in every depression, in every war, in every everything, and a lot of these companies paid dividends, by the way, during the Civil War. Like that's how old this is. Like you
Yeah.
think about this, this has been happening like the year Lincoln got assassinated, companies were paying dividends successfully. Think about that.
So
Like,
to add some context
like,
to it, he did concede that IULs. He conceded that IULs, because of course I challenged him and debated him on a lot of the things. He conceded that for one,
okay,
IULs do go up over the course of your lifetime. It becomes a lot more expensive as you get older. And also, he conceded that
sure.
90 to 95% of IULs lapse around 70 to 76 years old. He conceded to that as well. So that is we'll go
Right, but he's going to tell you that he designs them better.
Oh yeah,
So that's just poorly designed IULs.
he
Oh
has a
yeah.
magical
Well,
formula that
oh,
I tried to get
please
some
don't.
of that out of him as well, but I couldn't seem to get a good a statement on how
Oh
exactly
God.
he changes it from doing it what 90 to 95% of the market does. So also too, adding in there. So you said that they are level premiums and they're fixed. Whether or not the cost of insurance is
Mhm.
rising, that's kind of another ballpark. But the
Right.
premium is leveled versus an IUL index universal life
It's
policy. It is not leveled. Let's go into the next thing.
right.
He said
Yeah.
IULs can be used for banking. MPI is infinite banking 2.0. And to add to that,
I don't know how infinite banking hasn't sued him over that, but
well,
okay.
infinite banking never got trademark. You gotta keep in mind
Oh
that
yeah.
our Nelson
Yeah.
Nash is no longer with us. So, in terms of IULs
Yeah.
being used for banking, one thing I'm going to go ahead and add some context to it. IULs have a probational period where you can't pull money out right away. So that in itself is why it differs from infinite banking because we can take loans right away from our policy. You can't do that with IUL. Also, too, so which he conceded on, and also he conceded to the fact that it is more of a long-term retirement plan than it is a banking system. But he had to, of course, ride the wave, man. He had to say infinite banking 2.0 is what MPI is. That's what MPI the strategy is infinite banking 2.0. So speak to
So
that.
let me ask you this. Let me ask you this. Did you ask him what his interpretation of infinite banking was?
Yes, he says he's read R. Nelson Nash's book. Here's another thing he said. An IUL fits what R. Nelson Nash describes as a banking system. He only suggested whole life based on the 1980s economics because, of course, infinite
Mm,
IULs in the Index Universal Life didn't come out until 1997, which is when I was born. So I'm older than the
okay.
IULs, by the way.
You were born in 97?
Yes, I'm older than the
That's
IUL. Or
that's
we're
the
the
same
same
year
age.
Transamerica. Yeah, Transamerica launched it that year. That's funny. So here's the deal. Oh, man, you're young. I was a junior in high school in '97. So here's the deal. You cannot do infinite banking with IUL. If you read any IUL contract, this is my problem with, and I'll just say it with MPI. And people will disagree with me. I know Curtis disagrees with me, absolutely, obviously,
Yeah.
right? But then there's other people like Rocky. I never say his last, DiFrancesco or whatever, who's like one of the biggest IUL people in the world who loves IUL, right? So Rocky and I don't agree on anything, pretty much. But you know what we agree on? That MPI is never going to work. That's what we agree on.
Mm.
And so even the number one IUL guy, like, and he's an
You got to
attorney,
fix
he's
me
got
up with
all these
Rocky,
things
man. I
happening.
got to speak with Rocky too.
Yeah. Like even Rocky, who I don't agree with on anything, we agree on the fact that MPI is not good for anybody. That's just our belief. And so and that's backed up by math because like here's the deal. The problem, so here's my problem with IUL. And when we look at infinite banking, we've talked about this already. So I'm gonna like kind of rehash just for 3 seconds. What is the purpose of infinite banking? It is to put you at the center of your financial success. It is a financial tool that's going to help you become who you need to be to live the life that you want to live, right? Like let's just keep it as simple as that, right? It's a self-completing plan that puts you at the center of your own success. And so when you and even Curtis Ray said it himself, it's more of a long-term investment plan. It's more of an alternative to a 401k. And so it's still a
Terminology is
zero-sum
important.
game.
Investment banking. We're saying something completely different. Yeah. Go ahead.
Exactly. You can't talk out of both sides of your mouth,
Mm-hmm.
Curtis. Like you have to take a look and realize like what is the purpose of this? You basically when you do an IUL, let's not even talk about MPI because I don't want to get like another notice from his attorneys because they keep sending me things. It's absurd. like let's not even talk about MPI. Let's just talk about IUL. When people try to convince you that any kind of IUL, I don't care if it's this IUL 2.0 crap that he's doing, like even that, like it's
Infinite
an
banking
IUL.
2.0.
Even yeah, but he calls it IUL 2.0 too. Like it's
Oh, he got
insane.
a lot of
Like
okay. I didn't know
it's
that one. He got
IUL.
that one too. Okay.
That's all it is. It's IUL that's you're using loans from the policy to get more like stuff and trying to use positive arbitrage and all this stuff. And it just doesn't work that way. Like, but if you want to go really deep into this, I'll go really deep into it with you and like show you. But like it's here's the deal. The biggest thing with IUL that I have a problem with is that it hasn't solved the problem of aligning your money with your values and beliefs, and you're not leveraging your money to help you create your life that you want to live. You're basically saying, okay, I'm buying this story that the government is bad. I'm buying the story that taxes are bad and the risks going forward are bad. And you're simply trading putting the government in control of your money and putting a life insurance company in control of your money. Because remember, make no mistake about it, when you sign on the dotted line with a whole life insurance policy with a participating mutual company, you are a shareholder of that company. You are a business partner of that company that is sharing in the profits of that company. When you sign on the dotted line for an IUL, you are now a profit center of that company. Make no mistake about it. If you don't believe me, go back and look at UL, traditional UL, which is basically all IUL is a traditional UL platform with an option strategy attached to it. And listen, I could go on for hours about this.
I
Right?
already know that. That's another episode, right?
Like that's all IUL is a traditional UL with an option strategy attached to it. And when you look at how all these people that say, oh, you know what, I'm okay taking the government out of the equation and putting the insurance company in charge of my financial future and being a profit center for them, because IUL companies are going to be moral and they're going to treat me well and they're not going to do anything to screw me over. Guess what? Go back and do a little review on history and see how they treated all the people that had UL policies from the 80s and 90s.
Oh yeah, that's why the
and when all
universal
those
life
policies had
kind of
problems.
faded out, is because of that. And what's crazy is all
Totally.
they did was slap index on there, and it's like, oh, well, you can take advantage of the stock market too. What's crazy?
And by the way, that story of upside potential, downside protection because of market participation that's being sold, go read the Mutual of Omaha, which is what most MPI is sold as. Go read that illustration, and it says on there, it's not meant to be sold as upside potential because of all this market exposure. It's upside potential compared to a traditional universal life
Well,
policy.
you
That's
saw
it.
the notice that was sent out. I know Mass Mutual sent one out, but the Department of Insurance sent one out talking about IULs and the fact that they have to. They sent out a notice of how they're being illustrated and they're being sold. That basically a forewarning that if they don't start reconstructing those to show more realistic values, there's going to be an issue because a lot of people are, of course, upset about what they're actually finding out later on down the
Yeah.
road. And so one
Yeah.
big thing to speak to as well is that if you read the an index universal life contract, is that it's letting you know right then and there that things can change. It's not a guaranteed contract. Things can change. And so most of the time, whenever you sign a contract with a party and things can change, 9 times out of 10, things are going to change, right? Because think about it. If I if I enter into a deal with you and I'm an opportunist, because that's what most businesses are, and even entrepreneurs, it's not
Yeah.
necessarily makes them bad, but they are opportunists. If you know that hand
Yeah.
sanitizer sells for double the amount of money during a pandemic, you up the price, right? So same thing here. If they're inside a contract with you, they're more likely going to make some kind of changes to where they have an arbitrage situation that benefits them. Now, I'm going to dive into two more things, and then we're going to go into a couple more truth versus half truths, and we'll wrap it up. So I know you're an important person. You got some things to do. All right. We have here market gains are compounded with the guaranteed interest rates in an IUL. Now, my rebuttal to this is that the market gains are not compounded. They are added into the policy. They can be locked in. There's a floor that keeps you from losing those, but the market gains themselves are not compounded. So that's a statement that he made. Speak to that.
All right, this is my favorite thing to talk about. So, man, how to get in? So one of the I could literally talk about this topic for an hour because it's that complicated, and that's my biggest problem with Index Universal Life is it's a very complicated product that's sold as a very simple solution, right?
Correct.
When in fact it is not simple, and all this simpletonness that's sold that MPI is this simple, innovative solution that's pretty much more predictable to get you where you want to go is bullcrap. Like that is what it is. Now, here's the deal. One of the biggest, I guess, to answer this, one of the biggest marketing phrases that's used is "you cannot lose money due to market loss." Right?
Mhm.
That's the idea because you got a 0% floor. They say you cannot lose money due to market loss. I gotta write this out because this is something that is very visual. So they say you can't lose money due to market loss because like maybe you have a 10% cap, right?
Mhm.
And a 0% floor. So they say whatever the market does, you could earn up to 10%, but if the market goes super negative, you're capped at 0, so you can't lose money. That's the idea, right? Now, they will argue that you have expenses, insurance costs, all that stuff. So yeah, that'll come out. But at the end of the day, you can't lose money due to market loss. But you know what you can? You can lose money in the policy because of market loss. And that little shift of due to from that to because of, right, market loss is a huge deal because what happens is we have to think about as soon as you take a loan against your policy in an IUL, you're injecting risk into the policy because what you're doing is you have a 5% loan rate, right?
Mhm.
So when we look at a 5% loan rate, and as we're taking, let's say we got like $1,500,000 of cash value in an IUL plan,
Mhm.
right? What's happening, and this is my problem with MPI, is that when you borrow against a policy at any point in time, you're starting to inject risk into that policy. My problem with MPI is you typically start taking loans in year 3 to 4, right?
Correct.
So now all of a sudden and on the illustration, it looks really good because you have 50 basis points of positive arbitrage throughout the entirety of the policy. But the reality is about 25% of the time, you're looking at the policy is actually going to perform worse than the cost of money at 5%. So instead of having positive arbitrage, it's going to inject more costs and fees into it, yet nobody talks about that, right?
Mm-hmm.
And so what's happening is if I got 1.5 million and then I start taking 100K per year, let's go down, 10 years. We've taken $1 million out, right? But what have we done? We've been paying 5% on that already. And so it's going to illustrate really well because of positive arbitrage, but we've really got maybe $1,500,000 in actual loan expense. But here's the deal. Because of that, it's worked on positive arbitrage. The net cash value has probably dropped to about $400,000. But it's always going to allow us to take the $100,000 a year of income out, even though our cash value is only $400,000, because there's going to be this accumulated value column that's going to be even bigger. The accumulated value is going to grow, and it's probably going to be like, I don't know, 3 million, right? So if we look at that, and I know this is like all over the map, but this is what I'm talking about. This is like complicated stuff, right?
Yeah.
And so, but here's the deal. We lose money not due to market loss, because you can't lose your money, you got the 0% floor, but here's what's happening. And this is what MPI does. Your loan balances start accumulating and they never go away, right? So that injects risk. So now I've got this $1.5 million loan balance right here. The first year the market does 0, right? I've now got a $400,000 cash value, net cash value, that works on the illustration because of the positive arbitrage. But now what happens the year that the market does 0 and I've got this 5% cost? Well, now I got to take this 100K. I've got my 100K in income because I'm banking on that 100K. If I don't have that 100K in my life is in trouble. Fair enough?
Mm-hmm.
Because people like Curtis want to get me to put all my money in these plans thinking that they're the cat's meow. And so I got to take my 100K out of this 400,000, right? But what else happens on a 0% year? I got to pay 5% interest on 1.5 million.
Exactly.
What is that? That's 75K.
More than that is even the bigger scope of it is that if you do make if the market goes up, the contract is not compounding. The guaranteed rate on an IUL is about 2%. So
it doesn't matter. The guaranteed rate won't even come into play.
But the whole point is that they don't take market gains and then add them to the guaranteed interest rate. The interest rate that you're being paid on premiums are completely separate from any market gains that you would make anyways.
You're not even making. You're always exposed to the index. And look at this. When they say you can't lose due to market loss, guess what? In this year, let's say the market didn't even have a negative 20% year. Let's say the market had a 0% year.
Which means your money did not grow that whole entire year, correct?
Which means your money didn't grow. What happens is I take my 100K out and I have $75,000 of loan expenses. That doesn't get handled by the credits that are credited due to the market gain, which is what the positive arbitrage shows on the illustration. And they will never show you this on an illustration, by the way. This $400,000 of cash value has to pay for this $175,000. So now all of a sudden I only have $225,000 left of cash value. That increases my net amount at risk. That increases my cost of insurance and all the charges in the policy. That makes it so the policy is massively inefficient. And if this happens to you 2 or 3 times in retirement, you are toast.
Well, bingo, man. You just hit the next one. So the next one was you can retire 3 times wealthier than traditional retirement plans because of the guaranteed uninterrupted compounding inside of an IUL. So you've already hit that on the head. Yeah. So, man, on our next episode of What Would Curtis Do? Make sure you stay tuned for that one. We're gonna bring that to you. We got some more fun stuff coming for you. But that's all. I know that's all you can handle right now. I don't want you to pop no nerves in your head or anything like that. because I'm gonna tell you what Index Universal Life reminds me of. And I love investing. I'm a serial investor, precious metals, crypto market, the equities market. For you people at home, equities just mean stocks. but a number of different things with that as well. So, uh, and and what an IUL reminds me of is when I was a kid, I didn't like getting on roller coasters. I still kind of don't to
Okay.
this day. It reminds me of that big scary roller coaster at Six Flags. I don't know if you're familiar with like the Goliath.
I
It's the
love it.
one
I love
you're
those.
yeah,
Yeah,
you're crazy.
I'm
You're
in.
crazy. But
Let's go.
IUL might be for you,
Let's
man.
go.
IUL might be for you.
Yeah,
it,
no,
it,
it's
it,
not.
remi- it reminds me of the Goliath, and it's like, and I'm gonna take you all around the
Boom.
park and so on and so forth.
Heck
And
yeah.
my whole thing is that you don't control the ride and you don't know exactly when you get off. You don't know when it stops. So that's what it reminds me of, and it's a scary thing. And when I'm talking about investing, it doesn't sound like there's any fundamentals there. It just sounds like a speculative investment. So truth and half
That's
truths.
all it is.
We'll run through two or three of these, and I'm gonna wrap it up with you, man. Uh,
Yeah, man.
let's go into some of the things that we made the points of on the last, because this does, like we said, all this impacts the personal financial side of things. So we
Hmm.
talked about a few things in our last interview, and if you haven't saw it, make sure you go and click on the channel and scroll down inside of the breakdown playlist. You'll see it. I believe it's interview number 3. So Chris
Okay.
gracefully came on and helped me out when the channel was first getting started. So with that being said, is minimum wage, raising minimum wage is a good thing. Truth or half truth?
Lie.
Got you. Okay, cool. Next thing, next thing here. Student loans can be forgiven without raising taxes. True for half truth.
Lie.
That's what
Like, I mean,
I'm
like,
happy we agree to these things. So I'm like, none of these are half truth.
these are not half truths.
These
These
are
are just
lies,
bold, like
right?
straight up lies.
These are
Yeah,
lies.
yeah, yeah.
Okay, okay. Cool. Next thing is Social Security will
Hmm.
Social Security will not actually fail. They can increase the debt ceiling, and Social Security is the most secure way to make sure that everybody has uh security inside of their older age with the government planning. So the government thinks that Social Security is stable. It won't is even though we've heard a lot of different things about it, they believe that they can budget, manage the budget, as they say, the deficit, to where Social Security will survive into the future and you have nothing to worry about. Truth or
Sure.
half truth?
I mean, I'll say half truth simply because, it goes back to like aligning your money with your values and beliefs. And there are plenty of liberal people out there that would disagree with me. And so, like, I would say there's no guarantees in life. The government has proven it's got a really great ability of kicking the can down the road
That's
and
what I said. I
manipulating
think it's a
things.
half truth because they're willing to print their
You
way.
know,
They're going to try to print their way out of this thing. I
Yeah.
think they will.
So who knows? Yeah, I mean, it could be half true, but I would argue like you just make sure. Like I could tell you this, I think it's a lie personally. I'll give it a half truth,
Mhm.
but personally, I'm not acting like I'm expecting anything from Social Security because it's not in alignment with my values and my beliefs.
Got
Right.
it.
So I would say for you at home, like really like figure out what do you believe, like what are your values, and like do you want to rely on something that's in uncorrelated with those values.
Got you. Tax the rich. We need to tax the rich.
Yeah,
Truth
I
or
mean, if
half
you want to
truth?
ruin the yeah, if you want to ruin the economy, go
Sure,
for it.
right? Hey, let's go raise those taxes and let's. One thing about it is,
Yeah.
the saying is, "Don't poke a bear." Well,
Hmm.
if you if I own your job, you probably don't want to come to work and make me
It,
mad, right? Because
I
you
mean,
wouldn't go and yell
yeah,
at your boss, and that's kind of what we're doing with the whole tax the rich scenario.
I have an idea. Let's go out. I mean, it's the Atlas Shrugged argument, right? Like let's go out, and if anybody hasn't watched the movie Atlas Shrugged, just go watch it, right? Like this will explain everything. Let's go find the most productive people in the world that are increasing our standard of living and our quality of life and all these things. And let's go take the people that have produced the most value in this world and made your life
They're all
better and
entrepreneurs.
punish them
Yeah,
for it.
they're all
Let's go
entrepreneurs. They're all
punish
business
them
people.
for it.
And what's crazy is you won't find any
Right.
of these people in the White House. I don't care if you're Republican, Democrat. You won't
No,
find
of
them
course
in
not.
any political arena or building at all. It was, and also I
Right.
noticed too when people agree with this whole tax to rich thing, they failed to uh, delegate in their minds that the politicians are rich. So if they really had the same
Mhm.
philosophy that you have and hold dear of tax the rich, wouldn't they just take a pay cut?
Well, you know why they're the rich? And this goes back to what we were saying before, because they control everything
Exactly.
at the end of the day,
Exactly. And that's why we
And
believe in
so
what we believe in is because what we want more control over our assets, we want more control over our money, and that's what we got into. So today, guys, we unpacked a lot of stuff. Chris, I wanna I wanna thank you for coming on to the show, man, for another
yeah, man,
episode
it's
of the
fun.
breakdown, dude. I told you we had to do a part two because it was awesome, and I think and Curtis just gave us some fireworks. So I appreciate. Thank you too,
Now we
Curtis.
got to
Thank
do.
you. Don't forget you
Thank
are
you.
on the next episode of What Would Curtis Do. Yeah, I
There
tried to
you
get
go.
the footage from our interview. I only have the audio because for whatever reason, his guy Boris doesn't want to send me over the footage. That we
Oh,
had
I
that.
wonder
Yeah,
why
yeah,
that is.
I thought so too. Maybe if we can't
Oh,
put
you interviewed on his channel?
not on his channel per se. The platform that we used, it was to where I could only control half of it and not the other half of it, which is
Uh,
different because normally when people interview, they come onto your platform, right? So
I wonder why he's trying to control it so much.
maybe kind of it's kind
Hmm.
of like it reminds me of mainstream media that if you can control
Hmm.
one side of an argument and you don't let the
Mm,
misinformation and you just trust the science or whatever the case is, if we can control the
yeah.
narrative, maybe and we can't put a face with the words, then
Mm,
maybe it's less believable. So man, I appreciate you coming
interesting.
onto the show, guys. Better investments equals a
Awesome
better
getting to that.
future. Thank you for tuning in. Make sure you leave a like, subscribe. Also, to comment below on the video. Let us know some of the things that we can answer for you. Talk about economics, money, building wealth. Let us know how we can help you guys at home. Thank you for being a part of this channel and subscribing to it. And we hope that we can provide more and more value for you guys. Once again, thank you, Chris, for all that you've done and the value that you provided. I learned a lot
Yeah,
today.
man.
I can't wait to watch this at home. So I know a lot of people also can't wait for that. Until next time, guys, better investments equal a better future. And I see you guys inside the next video.